Greetings, this is the first video regarding profit planning. Here we will discuss basic definitions and concepts as well as complete an exercise. These concepts can be found in Chapter 9 on pages 380 to 429 of your textbook. Since Chapter 9 involves many important concepts, I will be explaining a few concepts and related exercise in each of these videos, unlike the previous chapters where I delved into definitions, explanations, and equations before tackling exercises. The first main concept and important definition that I'm going to explain is budgeting, which is the sole focus of this chapter. Budgets help with the managerial function of planning, which is making financial plans for the future. These are financial plans for the future and forecasts how a company is going to develop their sales or what products they need to purchase in order to make important managerial decisions. Budgets also establish control, which is comparing actual results. For example, in a company that sells t-shirts, how many t-shirts they sold versus the actual amount. So to be able to adjust budgets and plans in general. Also, a big type of budget is called the master budget, which is the financial plan used for the whole organization or the big old budget for any company. However, some budgets may be for a long period of time. However, there's a special type of budget called a continuous budget, which is exactly for only a normal fiscal cycle or 12 months. Next, we'll discuss the two main and different types of budgets. The two main types of budgets are considered to be operating budgets, and the other type are financial budgets. The main type of budgets that fall under the operating budgets are what brings revenue to the organization, which are considered to be sales, production, finished goods, inventory, and the budgeted income statement. Financial budgets involve how cash flows in and out of the organization and where it is financially. So there is considered to be the cash budget, the budgeted balance sheet, budget for capital expenditures. So, notably in the operating budget, there's the cost of goods sold budget, the direct materials budget, the direct labor budget, the overhead budget, and last but not least, there is the selling and administrative expenses budget. In this case, I will only go over material for the sales budget for an exercise. However, I'll be going most of the operating budgets in my next few presentations, along with the financial budgets. And I'll discuss most of these in depth, minus the sales budget, which I'll discuss more in depth now. The sales budget is extremely important because it describes the projected sales in units in dollars, which feeds into the next budget, which is considered the production budget. This budget is an estimate, which is much different than a sales forecast. Sales forecasts alone depend on more detailed information such as from the marketing and sales department and past accounting information to keep on updating it, kind of like the weather forecast if you think about it. Sales forecast also involves initial estimate. However, the sales budget is just expected sales in general. Next, I will complete a sales budget exercise. The problem that we will be completing is 9-34 on page 416 and part 1 only, which involves creating a sales budget. This reads, use the following information for exercise 934 and 935. Assume that Stillwater Designs produces 2 automotive subwoofers, S12L7 and S12L5. The S12L7 sells for $475 and the S12L5 sells for $300. Projected sales number of speakers for the coming 5 quarters are as followed. For the S12L7, first quarter 2014 800, second quarter 2,200, third quarter 2014 5,600, fourth quarter 4,600, first quarter 2015 900 for the S12L5 respectively, first quarter 1,300 for 2014, second quarter 1,400, third quarter 5,300, fourth quarter 3,900, first quarter 2015 1,200. The Vice President of the Sales believes that the projected sales are realistic and can be achieved by the company. Exercise 9-34 Sales Budget. Refer to the following information regarding Stillwater Designs above. Prepare sales budget for each quarter of 2014 and for the year in total. Show sales by product and in total for each time period. The way that I completed this problem is using what we've learned so far regarding the sales budget. I broke it down for each quarter, respectively, of 2014. And I did by first quarter, I did for S12L7 and S12L5 separately, doing 800 times for the S12L7, how much it sells for $475, and for L5, respectively, times 300. Each of these figures for each separate quarter. However, doing for the year total, I did each one respectively, except for only up to the fourth quarter, because there's 4 quarters in a year before the total. As I have mentioned for part 1, I broke this down into different quarters. Notice how in each different breakdown, it's the who, the Stillwater Designs, the what, the sales budget, and for the first quarter, then the second quarter, then the third, and then the fourth quarter. I broke down from each different S12L7 and S12L5 with each different sales in units, which are accordingly for each of the separate quarters, and same for L5, and also the cost for each unit was $475 for all of the S12L7 for each different units. No matter how many units sells, it's always going to be this price per unit. And also selling price per unit, same respectively for S12L5. The total sales dollars, bottom line, for each of these is always going to be the product of the sales in units times selling price per unit. On the next page, I'll show the yearly sales budget for 2014. Likewise, I did the who, Stillwater Designs, the what sales budget, and the when for the year ended December 31st, 2014. I broke these down into each different section, S12L7, S12L5, and used the data I found in the previous example, except you have to break it down by quarter, 1, 2, 3, 4, instead of each different separate quarters, which is sales in units for each one, and obviously the selling price. When you calculate the total, notice selling price per unit is going to remain the same. However, for the year, it's the sum of the sales in units altogether. So the same thing right here. You multiply the product to get the product for sales in units, selling price per unit, even in the year. Because, as you recall, selling price per unit remains the same. Likewise, for S12L5, you have the sales of units respectively for S12L5, the sum right here, and also the unique selling price per unit in the bottom line. This concludes our first Chapter 9 video, and the next video will be the second Chapter 9 video on profit planning, which introduced additional concepts and delves into more textbook problems. Resources can be used at ACE in both the Bedford and Lowell Math Centers, as well as e-tutoring. Thank you for watching, and please stay tuned.